following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host once more. Into the breach do we go, dear friends. And, of course, FOMC meeting notes were out just a second ago. In that, what did we have? Nothing that exciting. But everybody was hoping for a little bit of a market juice or juju. Needed to get its mojo back. And there just wasn't much going on. So a little bit of market gas, but that is about it. We're up on 5 points on S&P cash. We're up about 10 points. Volume has been rather tepid, 1.7 billion shares on the NYSE today. So it's been fairly light volume pretty much the entire day. So we'll keep an eye on this, but I'm starting to think that maybe we're around where we should start looking at putting some short positions on. Of course, options expiration is on Friday, so there will be kind of a bullish bias throughout the rest of the week. But you can get a lot of surprises, especially with as few shorts as there are in the marketplace. But we shall see. Anyway, as always, we like to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
And, of course, we always like to start off with a little bit of history.
And it's all just a little bit of history repeating.
And what's happened this day? Why is it? For some reason, I think my dates are reverting. Because I think it was 1898. I don't know why that's doing that. I'll have to check on it. Anyway, on this day in 1998, why salmon fishing near the Klondike River in Canada's Yukon Territory, George Carmack reportedly spots nuggets of gold in a creek bed. His lucky discovery sparks the last great gold rush in American West. Carmack reportedly spotted a nugget of gold jutting out from a creek bank. His two companions later agreed that Socom Jim Carmack's brother-in-law actually made the discovery. News of the gold strike spread fast across Canada and the United States, and over the next 2 years, as many as 50,000 would-be miners arrived in the region. About 10 of them made money. And that's kind of the way that things go, isn't it? Everybody wants to jump on the bandwagon after all the money's been made. But on this day, in the 1800s, the last big gold rush, unless you want to talk about the gold rush from 2001. But that's it. Anyway, we're going to start off the day out here with some charts. Just not a lot to get too excited about in the marketplace. What is it? TGT was up this morning, which is kind of interesting to see anything in the way of retail bouncing. This thing sold off, came back up, and now kind of hanging around about $56 from $54.25 yesterday for the low. So you got a little bit of a bounce in here. And again, you got to watch a lot of people shorting these stocks into earnings. Anybody fighting for a dime in what they can find. But we'll keep an eye to see what else is going on out here. Okay, so what do we have? Just not a lot happening. We're going to go back through some of the things that I think are interesting. But let me reorganize a few of these things here so we can get it. Oil's off 67 cents. Was starting to see some charts in my work and scans at night that started to look like maybe the energy sector was trying to bottom. We'll see how those do by the end of the day in the newsletter. But nothing today so far, off 67 cents on crude, up $3 on gold. and you may just see what's going on with gold, especially into Friday. I don't think anything's really starting to start to move. Natural gas is off 3.5 cents, and we're right at the point historically every year where you're pretty close to finding some kind of low. Hang on just a second. For some reason, there I got a cord out. Anyway, let's do this. Let's have you give me a call at 877-927-6648. Email me at path@tfnn.com. And, of course, you can always post a message in the den. So what do we have happening out here? Okay. Just going through a few of my emails here. Someone wanted me to look at IBM again. They had a big to-do last week, but did nothing for the price of their stock. They are basically playing around this October 18th, 2016 low, 143.49 on that one. You got below it. Don't think you're back above it yet, but 142.88. So you haven't closed back in that range, but you have at least gotten down to this 140 level with much lighter volume than that previous low. Energy off the 157 high on June 12th. Down to this low has also kind of come down a little bit. You had the big day of earnings on the 19th of July that didn't help the stock at all. It continues to move lower. But certainly you've run out of steam on this one to the low side. Had a few emails asking me what the IBM machine learning announcement last week actually meant. And I have no idea. It was one of those fluff pieces, and I think because it was so fluffy, it didn't do the stock any good last week, and certainly not any real big changes out here other than the fact that you are at least out at a previous low with lighter volume. So maybe you get a bounce up to 150. If that's on light volume, then maybe you're getting set up for the next, and maybe 152. You're getting set up for the next ABC on the way down, or maybe the whole market turns south, and that would be it. Okay. Okay, what else are we doing? Okay. Okay, just looking for a few other things to see if there's anything happening out here. Especially after the news, if you can call it that, with the FOMC announcement. But I don't see anything. We're at 5 points higher. Volume had a little bit of a market push with volume, but last 5 minutes been pretty light. 1.758 billion shares. So wimpy continues on. We'll look at more stocks when we come back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And Urban Outfitters, another little sign that maybe there's actually some life after death in retail. This got to 21.31. Again, some of these stocks are bouncing. This one was fairly decent bounce, but again, monster short levels in that one. I want to see what we had. As I said earlier, looking at the oil and gas sector, you're down on fairly light volume, but no real stoppage here. June 21st in the XOP had 29.90 at 39 million shares. Yesterday you had 14.5 million shares. Today, a little over 9 million shares. So not a lot of volume. Now, this one does have a little gap that goes back a ways. So let's go back and take a look at that. Actually, a couple of gaps, but not really significant in the way of heavy volume. And the last one had 20 million shares. So I think, you're right in there. But if this thing cracks, you really don't have anything lower except this February 24th low in 2016. That's 22.58. And I don't see no signals yet anyway to buy it. I wouldn't be shorting it here. But certainly if you see another dollar or so down on XOP, I'm thinking you're going to start looking at that February 24th low at 22.58. XLE, same kind of thing, almost the same kind of setup. We'll look at the volumes out on this one. You've got a couple of gaps around the $60 level. This one's a little less plain on it. Volume's okay on it. But 50, 25, and 47.81 are untested lows with high volume. And that's going back to January 20th, 2016 and February 11th, 2016. But you're in the 50 million share pond there. What do we have? 10, let's call it 11 million shares so far, 12.7 million shares yesterday. So there isn't a lot of juice on this thing on the way coming down. But at the same time, there's no real good signs that we found any kind of lows in the energy sector out here today. To see if there's anything else going on. Don't see anything there. Well, we rolled down $2 on the S&P cash, $2 higher now, 1.8 billion shares. See if there's anything else out here. Looked at a few of these others. I wanted to see. Okay, so we got a question in the email. Let me get that. Okay, want me to look at the SMHs and the SOX. SMH. Again, you really haven't broken a high or a low. And I think we talked about this last week, and that really sets up, lower highs, lower low, or higher lows, lower highs. So until this thing breaks out, in fact, let's do a diagram of this right now. To do this. Until we really get kind of out of this, and this one can continue for a ways anyway, because we're not really 3/4 of the way. But again, I really hate trying to place a trade on one of these when they haven't really broken out of their triangle that have been developing for a while, and that's what the SMHs are in right now, is this asymmetrical triangle. That also suggests that maybe you could have another week before this thing broke out. When it does, invariably you fade the way that it breaks out. About 80% of the time, it is a head fake. So I don't see anything else out there. Let's take a look at the SOX real quick, see if there's any different signal in that one. No, kind of the exact same thing. So, these things may just hold up. If the market is kind of starting to roll south, which I am thinking it might, I've actually, just before the FOMC meeting, started putting on some short positions in the daily newsletter. You really kind of have to look at it out here. And that is, let's see what we got. Okay. What do we got? Okay. Yeah, that's about it. Let's take a look at some of the highly shorted stocks. Yeah. Okay. Jackson. Take a quick look at Tesla here today, just kind of going sideways. I was thinking if the market in the tech sector is going to roll, that we're probably going to see it first in Tesla. This thing's been hanging up on little or no juice for a while. Let's zoom in a little closer out here. And almost no juice today. You've got a couple of 3 gaps that this thing could fill very quickly if everything started to turn south. Those energy stocks not making a bottom also is not a good sign for Tesla. Of course, every 10 cents in gasoline's got to sell at least another model, whatever the latest model is, Model X. But just the question is just how long can this thing hang up here? There's no signal, again, for a lot of these, but any tick below a 3x3 would probably set up a bigger chart pattern for Tesla going lower. Let's see what else we want to have. CDE, I want to see how that responded today. Let's get the overlays off. Again, you can call me at 877-927-6648 or email me at path@tfnn.com. Core Mining. I think we pointed this one out last week as it was getting close. It still has not tested that low, and that still is problematic. The March 14th low at $7.30 with 2.66 million shares. You had the August 15th low, but it was 21 cents higher. So we got a little bounce out of here today with 1.5 million shares compared to 1.6 million shares. So you got a little juice in the in some of these. I also like the way that this one came off the April 13th high. So you might see a little bit more in that. Let's see, Okay, so now we're flat on the S&P cash. Well, what else do we have? Okay, got a market that could start moving quickly. So we wanted to just take a look. I have a question to look at MU again. You basically are up to resistance on this one. You came down with 51.2 million shares on earnings. You're back up with 26.7 million shares. That's what I'm saying, that even the strongest of these are having issues today. And Intel, this one down, volumes not a lot, well, 14.3 million shares. I think the long term on Intel looks good. This market pullback may be problematic for all of these tech stocks. As you sell one, you kind of sell them all. Certainly nothing compared to this volume up on the first. We'll be back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we'll watch the ticker very closely here, but I think we've gotten our last little pop, and we could be seeing the market really start to pull back over the next, let's say, into the first week of September. September's never been a great month for the market when it's pulled down a little. It's normally pulled down a great deal. Political intrigue, other things may push this into the light. Some of these stocks like I said, Tesla looks kind of close where if it didn't have that monster short position, I probably would have pulled the trigger. Let's look at some of these other techs that look a little tired. NVIDIA, wanted to look at this one. You, of course, had your high at 92 million shares on June 9th, 168.50. Got to 174.56 on August 8th. Nice little pop with 32 million shares on the 14th. And now the last 2 days, nothing. And would I be shorting this one? It's probably still one of the stronger ones like Micron. So there's much weaker fish in the sea. Wow, am I going to really get my mixed metaphors out this year? But this really looks like there's something bigger going on. And these things have kind of topped out in the short term, maybe even the medium term. We've been waiting for some kind of decent pullback. So we'll keep an eye on that. But who knows? Anyway, I wanted to see some of these other ones. We were watching Best Buy. I know earnings are coming up on it as a kind of a gauge for what's happening for the Apple smartphone business. I've been going to Best Buy probably about once a week for the last month, maybe 5 weeks, just to see what crowds are like over the weekend. It's brutally hot down here in Florida, especially in the afternoons and early evenings. So it's not surprising not to see a lot of people out. But, you know, even on rainy days, didn't seem like that changed anything when it was a little cooler and a little bit more nice. I don't see the new product that really drives Best Buy. But, again, I'm not willing to get in front of this one, 2 weeks in front of earnings, because even with down markets, these stocks have had a tendency to hold higher. There's cycles, especially in these electronic retailers, and I just don't know what the cycle is this year to drive it, other than Apple smartphones. And we're starting to get pretty much in the depths of August here, and we still have not seen the big volume start to build over there for Foxconn in China for Apple. So this may actually push Apple or Best Buy's earnings and Apple's both into the first quarter of next year. And that we'll watch it. But I think if you're trying to figure out, especially Apple and how that's going to work over the next week, if we do get some kind of market downturn, certainly start looking at Best Buy and Apple. We'll go to that one next, AAPL. Okay. What do we have? Okay, Apple made another high today. I don't know if there's a whole lot to say about it other than that. You've got that big gap at about 122. Would it take some kind of act of God to get this thing back? If something happened where the tax package was not going to go through, could you see it back at 122? Man, that would be a tough one. I think the entire market would have to fall apart. But could you see it back at 145? Maybe 140s? I think you could. If there's zero chance of that tax bill getting passed this year, then I think you could probably watch Apple hang out at the 140 area, maybe even go back up a little to the highs. And as soon as the first round of 100 million smartphones goes out the door, that may be some kind of long-term high for Apple. It's very hard to figure out how they're going to sell the kind of volume that they want at $1,200 or $1,000 a smartphone. We still don't know that price, and that still may. We really don't know what that will do to people buying new smartphones. It is going to be more expensive, and that's it. So keep an eye on it. So we're up 1 point on the S&P cash after being up about 9 or 10 points on it. Volume continues to be rather lackadaisical. You had a little bit of juice right after the FOMC meeting, but we're kind of stuck at 1.9 billion shares on the NYSE. DSW, which is Designer Shoe Warehouse, again, kind of looking at some of these retailers. We've seen this a couple of times now. I went down the bad road of picking one that I thought was going to bounce. Heavily shorted, no volume, but it didn't seem to matter. over the last couple of weeks. This one, again, has tested the lows yesterday on lighter volume, so you should see a fairly decent bounce. Almost nothing today in the way of volume. This is, if you don't have them around, this is Designer Shoe Warehouse, May 23rd, $15.98, 8 million shares. Came into it yesterday with this 2.3 million shares. Little bounce today, but we're not even into 1 million shares. What you really have to watch out for in these is this huge leg down from 1940, where this thing just kind of came down, and you get a light bounce out of these things. You really need the market to really take off, and so far not kind of seeing that as we go forward. So what else do we have? We looked at NVIDIA, we looked at Best Buy, we looked at Tesla. Get through on those things. See if there's anybody else out here. We got a couple. Okay, question about where I'm looking for the SPX. This at least this morning we'll look at I'll have to look at it tonight. But options were basically saying somewhere from about 2450 to 2475. So as far as I'm looking at, the risk reward for going short today was pretty good. That is that there wasn't much to the upside. Could we see, the start of a pullback into Friday at 2450? We could. Could we get some kind of huge political news that changed a lot of that? You could. And the question is, in light volume, summertime trading, it's not uncommon to see if you can't push it up, push it way down. And maybe the excuse is political. Maybe it's, Iran threatening to nuke us now that North Korea has decided not to nuke us. You never know. But where it normally, especially for news, you're looking one way and the news comes out somewhere else. And maybe that is what I'm kind of thinking about. Okay. Okay, what else? Wanted to look at got a few emails here. Oh, we're going to the break. We'll look at a few other tech stocks, other stuff going on here for the next segment. And see what else is happening.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And yes, you can listen to TFNN 24 hours a day, but I think you got to sleep. It's on 24 hours a day, but I think you should only listen to it 16 hours a day, and you should sleep the other 8. But that's just me being me. Anyway, fairly interesting moves in the market, but just looks like, a lot of the same. I have a question, what I normally look at, because I don't spend a lot of time on the S&P, and normally if I'm going to look at something, I especially look at the RIDEX S&P equal weight ETF more than anything else. And, you had a little spike out here today. You're into the huge down day of the RSP having 670,000 shares. You're into it with 240,000 shares today. You spike through that. It looks like you're going to close in that little gap down around 93.35. So to me, you basically have the setup out here from 92.13 to think about an ABC on the way down. And, you had that kind of big down day without a lot of preparation, but you had the volume. You kind of bounced. A lot of stocks ran back up, especially the most loved in the index. But I don't know if there's a whole lot more you can say about it other than that. One of the things that has me think that maybe tech just isn't quite ready to fail is this Digital Realty Trust. And I've been watching this. If you're unfamiliar with it, DLR is a REIT for startup property around San Francisco. And I thought this one would probably see the sellers out the door first. Now, this has come on a huge spike to 121.53 back on June 26. You kind of came up, did the 118, which was basically the 618 retracement, or maybe a little more than that. Of course, you pulled back down, you popped back up. Now, here's where you're starting to see maybe a little signs. I'm going to watch this one in the next couple of days. But up on 452,000 shares today. At least you've got that August low out there with 1.3 million shares already. And, of course, 1 million shares untested on the June 6th low. Would not be surprised to see, if you're going to think about maybe a pullback in the market and a lot of cash not coming back into the IPO market, means that you probably won't have a lot of cash going into the startup market. And this thing would probably be, I would not be surprised to see this thing, if the market pulls back, go from in these 110 to 120 areas back to 50. There is no bigger market with real estate bubble than San Francisco. And I think this one really kind of shows it. And there's almost an insane desire right now to do everything but make money, especially in the bigger bigger stocks like Gulag and Fakebook and a handful of the other people. Apple's got its giant $6 billion boondoggle with its new offices. Normally, I've seen enough cycles go through to see the guy that bought the new Corvette suddenly has financial problems a year or two down the line. The guy that has a growing business buys a much too large business, and it sinks him over time. He buys a new office building. And I'm not, if I'm thinking of maybe a top, I think of it Apple and this giant $6 billion boondoggle that they had to build another office next to it just so that they could actually use it. Apparently, this thing was dreamed up in a fever dream of the previous CEO. What do I have? Steve Jobs. And apparently it's unusable. They actually quickly built a little side adjunct for a handful of the programmers to work at because literally the thing's a giant racket and you can't work. You know, normally everybody has a little cubicle and 10-foot ceilings. Well, this thing's giant and it just echoes noise. Everything you say can be heard by everybody all over the area. Anyway, it seems like those kind of things happen. Anyway, I'm watching this one close. It is up today, but it's up on little or no volume. So we want to probably be watching this in the next few days. If you're really betting on severe downside, this one is probably going to show it first. Again, you can give me a call at 877-927-6648. One of the ones I like to watch for signs of a reversal is the emerging markets, because normally if we get a cold, they get pneumonia, Ebola, typhoid, and what else is a horrible skin-eating disease? I'll think of one. But what do you have out here? You're getting kind of close out here in this emerging market to making a signal. Your last low in this one goes back to August 8th, and you had 571,000 shares. Today, you got about 400,000 shares. So we're going to get back in there with similar volume. But I'm going to be watching this probably in the next day or so to see whether or not this emerging market actually starts moving off this August 8th low. And that may tell you something, too, whether or not there's a lot more downside or just more market gas like we had last week. And a little bit of Malox will help the market out. What else do we want to take a look at out here today? Let's go back to a few other ones. Oh, we looked at that. We looked at that. So let's go back to some other stuff. Go back to some stuff last week. We came and had earnings in Chesapeake. Was looking to see whether this one was going to do a lot off this low. We're still a little bit above it, $3.56 for the May 23rd low. But 23, 24 million shares so far. This may have an opportunity to test that low in the next couple of days. Halliburton, let's take a quick look at that one. This one had come down, and you thought that this one probably should have held the September 27th, 2016 low at 39.76. It's below it. 39.13 was the low today. So you're out there on lower volume, but it doesn't look like that's going to hold right now. If it follows for the rest, same thing. You got a couple of gaps. You've got on this one still an untested low at 26.74, which is the January 20th, 2016 low. And again, I think, especially if you lose a third of the market in the S&P cash with these energy stocks, if they do fail over the next couple of days, you could see that kind of roll back into the rest of the market. MELI, which is the South American PayPal-like slash kind of Amazon kind of thing. I think we talked at length about them blowing up on earnings because they were offering free shipping. And if anybody knows anything about South America, they know that it's anything but smooth. This did kind of go fill all of its gap back from the huge gap up on the 5th of May. But it did it with more volume. We'll be back in just a second.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we come into the end of another programming segment, which is only like 2 minutes long now, had an email come in and ask about taking a look at Seagate, and I would be very wary on this one. It's had two major monster gap down. You still have a gap down to fill at $24. I suspect you're going to get that one more last gap down, and this one at around $24 fairly soon. Hard drives, been seeing a lot of ads for these things, and when you see a lot of ads, means generally a fairly decent good as supply. I think we talked about this when it fell apart back up at $50, that the very high 10 terabyte, hard drives, are selling fairly well in data centers. The downside is that everything else is kind of getting eaten up by SSDs. And Seagate, probably the worst of the bunch out there to handle it. Toshiba went out of business. That kind of gave them a 1-year boost. And I think the reason that you saw it up there at $50.96 as Toshiba was going out of business. I think that's filled back in. Everybody's moved to hard drives, and that truly kind of changed the landscape of it. But I would be deathly afraid to be long this thing until it gets to its third gap back down. After two, I'm going to say 75-80% of the time, you're looking for one more huge gap, just like these, from 50 to 45, from 40 to 34. If this thing opened up at $28, you could see it down to 22 the next day. So just be very careful if you're looking and trying to pick up any of these things on the discount aisle today. Well, it is Wednesday, so got 2 more hours with Tom O'Brien. Wrap up today. In the meantime, sell when you can, not when you have to. And we'll see you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.